The dollar's been edging up against a basket of currencies, the euro declining in cautious trade. And, in the market, sentiment remains cautious about prospects in Europe and them being able to sort out deep-rooted problems over on that end, even where we've got US data coming through surprisingly strong. We've got that European situation still overshadowing things. What are you making of the state of things in the global economy right now?
As you mentioned, Alishia, that the European situation really seems to be overshadowing much of what's happening in the rest of the world. We are seeing some pretty good data coming out of the United States, out of Australia as well, and the Chinese trade surplus yesterday as well. We did see some risk-on sentiment come through, but that really has been overshadowed by the fact that the debt situation in the Eurozone is really not on any kind of firm ground at the moment. We are seeing Merkel and Monti in talks as well today, but that doesn't really indicate that there's going to be firm resolutions and fresh solutions coming out of the Eurozone. So it really is going to continue to impact the markets for the rest of this week and as we go into the rest of this year. We are expecting the ECB to there is an ECB interest rate meeting tomorrow, and we're not expecting any kind of groundbreaking results coming out of that meeting. Yes, Standard Bank does believe that the ECB could possibly cut rates by 25 basis points, but if it doesn't, it's likely only to be a pause, as the ECB and the authorities, they really need to actually stimulate growth in the Eurozone before we can see the debt situation really turn around.
Absolutely. Many saying that we've got to see that weaker euro come through for that entity to actually trade out of a deficit position. While we've got the ECB and BOE rate-setting meetings in focus tomorrow, Shireen, the primary focus this week is Spanish and Italian debt auctions, both tomorrow and on Friday again. What are your expectations on those fronts?
Well, I'm not very bullish on both of those auctions. We are still seeing strains in both the Spanish and Italian markets, so we're not really likely to see very successful bond auctions coming through, and that's really going to temper conditions, risk appetite around the globe as well. We do expect that the conditions in the Eurozone is expected to deteriorate, and that we could possibly see further weakness in the currency as well coming through, and obviously that's going to translate into a weaker currency for the South African rand as well.
So with all of that playing out, to what extent is it really good news when you hear something like what we heard from Fitch yesterday, saying that it did not expect to cut France's AAA rating this year?
Of course, that is good news. Markets were expecting downgrades coming through, but that really did give the euro a bit of a bounce and really showed that there is possibly some glimmer of light. But what is important is the fact that the resolutions that are being spoken about, there's no real action coming through, and that is going to probably take a lot longer for us to get out of that debt situation, the Eurozone to get out of that debt situation, and that things could probably get a lot more worse before they actually get better. As I mentioned before, we do need to see the growth situation in the Eurozone come through a little bit more optimistic than what we have seen. And with the German GDP data expected to come out today, we could possibly see that come through. But Bloomberg expectations and a number of market analysts are expecting a further downward revision in the GDP number for 2011.
And some saying that commodity-linked currencies like the Australian dollar may be, more resilient to the risk-off sentiment than the euro, as commodity prices underpin things, and we've got a supply and other factors coming to bear there. To what extent does that kind of scenario translate to the rand? Because many analysts saying that we see little chance for the rand to break that 8 level without any convincing rally coming through from the euro first.
Indeed, as you mentioned, there's no convincing rally coming through from the euro, and we do expect the rand to continue along a weaker bias during the course of today. We're actually pointing towards a trading range of about 8 rand 5 cents to about 8.20. So we're not going to see very gradual movements down towards to break through the 8 rand 5 level. Instead, we're seeing more of a further upward bias towards 8.20.